Reverse stock splits raise a lot of questions. Did my stocks just get taken away? Is a company required to disclose a reverse stock split before it actually happens? Is a reverse stock split good or bad? How do companies get into the situation where a reverse stock split is needed? How do I know who's next? These questions about reverse stock splits express some of the confusion that investors feel. Trust me, I've been there and learned the hard way. Let's walk through reverse stock splits step by step, starting with how do companies get into this? A very high-profile reverse stock split in 2025 was the one performed by EV maker Lucid Motors, a 1-for-10 reverse stock split at the end of the summer. In a high-level review of the financials of this capital-intensive scale-up company, you will see growing revenues, very significant net losses, and hugely negative free cash flow that drives the need to constantly attract financing. As a result, the share count is ever increasing from 1.7 billion to 2.1 billion to 2.4 billion by issuing stock, and issuing more stock. The ownership percentage of existing shareholders keeps getting diluted unless they sign up to buy additional shares when stock is issued. By the end of August 2025, the number of common shares outstanding was nearly 3.1 billion. Does that rapidly expanding and very large number of shares outstanding lead to a reverse stock split? No, not necessarily. It is the share price that triggers it. By the end of August 2025, Lucid shares were trading at just $2 per share after a huge downward slide that lasted nearly 4 years since the peak share price. At that $2 share price, the company is getting very near to hitting an important regulatory requirement, the Nasdaq minimum bid price rule. A company must maintain a closing bid price of at least $1 for 30 consecutive business days. Otherwise, they risk delisting. Lucid didn't actually get into the danger zone, but proactively executed the reverse stock split prior to that. A $2 share price also poses a reputational risk. Companies don't like to be perceived as a penny stock. A penny stock is a low-priced, speculative share of a small public company, typically trading under $5 or even $1 per share. If you calculate the market capitalization of Lucid at the time of the reverse stock split by taking the number of outstanding shares and multiplying it by the share price, you will see that Lucid is actually a medium cap company, far bigger than a small public company, but nevertheless the reputational risk was there. How does a reverse stock split work? In the case of Lucid, with a 1-for-10 reverse stock split, the number of outstanding shares get divided by a factor of 10. The share price gets multiplied by a factor of 10. The market capitalization stays the same. 3.1 billion shares times $2 per share is the same as 310 million shares times $20 per share. Let's work through an example on the level of the individual investor. Let's assume that a few years ago you bought 100 shares in Lucid at $20 each for a grand total of $2,000. Over the years, the share price dropped all the way down to $2 per share, and your investment is now worth only $200, an unrealized loss of $1,800 or 90%. This is how your account looks after the reverse stock split. The number of shares has been divided by 10. The historical share price, as well as the current share price, have been multiplied by 10. The historical value stays the same, the current value stays the same, and your returns stay the same. The reverse stock split is a cosmetic change. The fact that you might feel bad about the stock is due to the long slide down prior to the reverse stock split, which has continued in the months after the reverse stock split. The fundamentals of the company have not changed. They still make losses, burn cash, and may need to issue new shares to attract capital, and may have to reverse stock split again in the future if the share price keeps dropping. The fact that you used to own 100 shares that you bought at $20 each and you now own 10 shares valued at $20 each, does not mean that your share got taken away. It is a result of the downward slide of the share price over the years, which got you a negative return of 90%. In the press release of the Lucid reverse stock split, there was a sentence saying that no fractional shares will be issued. What this means is that if you owned a number of shares that is not dividable by a factor of 10, then the following happens. Your pre-split number of shares is restated as two line items. One line item that has a number of shares that is a multiple of 10, and the second line item containing the remaining shares. The first line item is converted in the reverse stock split, while the value of the shares in the second line item is paid out in cash. What are the steps in announcing and disclosing a reverse stock split? In the case of Lucid, announce the special shareholder meeting on July 17. Hold the special shareholder meeting on August 18, where the proposal was approved. Board approval and announcement of the effective date on August 21st. Execute the reverse stock split after the closing of the stock market on August 29, the start of Labor Day weekend. Begin trading on the split-adjusted basis on September 2nd. So for those shareholders that kept an eye on press releases and news items about the company they invested in, there was a month and a half of notice prior to the event. Can we predict which company is next to perform a reverse stock split? One source of information is the very long list of non-compliant companies that Nasdaq maintains and publishes. If the reason for the deficiency is bid price, then a reverse stock split might be imminent. You can also check in your investment portfolio which shares are trading below $1, just above $1, or even below $5 to identify reverse stock split candidates. Remember that different stock markets might have different rules about the minimum bid price. There's no one-size-fits-all rule that applies to all stock markets in the world. Is a reverse stock split good or bad? It's usually a sign that the company is not doing very well. The reverse stock split buys them time to improve their operational results, but there's no guarantee that things will get better. Did my stocks just get taken away? No. You now own a different number of shares, but both the historical price and the current price of the stock have been adjusted to reflect that. How do companies get into this? As we have seen in the case study, continued operating losses and negative free cash flow drive multiple rounds of financing, which can lead to an exponential increase in the number of shares outstanding. Is a company required to disclose a reverse stock split before it actually happens? Yes. It needs shareholder approval and board approval with related press releases and SEC filings. How do I know who's next? Check the Nasdaq non-compliant companies list and review your portfolio for share prices near or below $1.